The Stock of the Day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
Stock of the day is Johns Lyng Group. It is a number of, among a number of insurers that have lost ground in recent days in anticipation of the impacts of Cyclone Alfred, which is approaching the heavily populated southeast Queensland coast. Johns Lyng, though managing to bounce back today, also seen potentially as offering some private equity interest because of its beaten down stock price there. Last week, the company said it expects FY25 revenue to reach close to $1.2 billion, down 5% from previous guidance. And as we can see today, it is up 7%. But as I mentioned there, some of those insurers have been under pressure. We're seeing that elsewhere today as well. So, Howard, let's start with you. Now, of course, it's also got exposure in North America. It was a focus post the California fires. Now focus on, well, inevitably, you look at those catastrophes, potentially with some significant damage ahead in terms of the cyclone.
Yeah, and in fact, that's it's awful to say, but that's actually good for them because they're not actually an insurer. They're a building company or a whole lot of I'm calling them franchises, they're not legally franchises, but a whole lot of different operations that are affiliated with them and work under them, whose job it is to repair the damage caused when somebody's home or property gets damaged. So they're not paying for this. The insurance companies are paying for it, and they called in to assess it, have a look, say how they could repair it and repair it on behalf of the insurance company. So
why did we see it come under so much pressure? You take a look over the past year, and well, in fact, that's its performance, but you can see just over the past 12 months, has come under a lot of pressure.
Yeah, because there are two parts really, or two main parts, there's a third very small one, to their business. The one is the business as usual business, which is repairing individual homes. I was once a client when I stupidly drove my car through the back of the garage and landed 5 levels down on my tennis court, wrote off the car and did a large amount of damage to my house. So they came round and repaired the house, paid for by Amy, who I was insured with. And they were marvellous, absolutely marvellous. But that's their business as usual, and that actually did quite well in the half year compared to the corresponding period a year earlier. The second half of their business is the catastrophes, floods, fires, cyclones, that sort of thing. And in the half year, there wasn't much of that. So their business in that sector shrunk quite dramatically from the previous corresponding period. The market hammered them for the fact that they didn't do quite as well as guidance, but their guidance for the full year is above what they did the previous full year, but not as much above as I think people had been expecting. But I must say, I thought the massive drop in share price was quite absurd. A bit of a drop may have been understandable, and quite a lot of Teaminvest members I know have actually bought more Johns Lyng. I didn't, I was away at the time, and by the time I woke up with it all having changed, I decided I'll leave it and see what happens. But a lot of Teaminvest members I know have bought into Johns Lyng. I think our fund bought some more as well.
So,
and this catastrophe happening now,
yes,
about to, can only be good for them, probably for at least 2 years, because all those homes, assuming it goes the way they're expecting, those homes aren't all going to be repaired in 6 weeks. It'll be this financial year, next financial year, and some of it may even go into the following financial year.
Yeah, well, look, fingers crossed, of course, it's not as bad as
absolutely
anticipated because of the potential danger that we're facing. But as you say, it is potentially benefiting Johns Lyng. So what are you going to put on it in terms of a hold or a buy?
No, I reckon a buy at the sort of prices it's on at the moment. I mean, it's showing fantastic returns for the future on our software. I mean, the projected return is well into double figures per annum, even on our margin of safety, over 13% per annum for the next 5 years, because the price has dropped so much.
All right, buy from you, Kai.
Yeah, in a very similar boat to Howard. And as as Howard mentioned, basically business as usual. They actually did report fairly well for that portion, that segment of the business. It's really the catastrophe business, but we do have to consider that there is a lag in terms of backlog. So the reason why a lot of these insurance companies have done well in the last half year is because there has been a lack of natural catastrophes. But obviously, so then the amount of work for Johns Lyng has gone down for that catastrophe business segment. But as we saw in LA and potentially in Brisbane and the North Coast, there might be a bit of damage done, yet to be seen. I think it makes landfall tomorrow, so we'll probably have a look at that tomorrow. In terms of investment thesis, I think it's absolutely cheap. And that earnings move where it dropped about 30%, I think was very exaggerated for what they reported. So I think at the moment it's a bit undervalued, and it's definitely a decent buy for us.
There you go. It is a double buy, one for our investments committee to consider. That is Johns Lyng Group.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.